Welcome back to another exciting episode of Stocks Banter, the show where we dive deep into the world of stocks and investments. I'm Stefan, your earnest and ever-studious host.
And I'm Olivia, your co-host, and I'm not going to describe myself, that's for the viewers. Today, we've got a real treat for you as we explore Steven Fiorillo's unique take on DraftKings stock.
That's right, Olivia. Steven Fiorillo, a well-respected investor and writer on Seeking Alpha, recently published an article titled, DraftKings, the valuation doesn't make sense to start a position. And it's got some really intriguing insights.
Steven's article has sparked a lot of discussion, and we're here to break it all down for you. So, grab your popcorn because this is going to be a deep dive into DraftKings, their valuation, and the future of the stock.
First, let's set the stage. The US gambling industry is booming. In 2022, it generated over $54.9 billion in revenue and is projected to grow at a compound annual growth rate of 10.5% through 2030.
That's a huge market, and DraftKings, a pioneer in mobile gambling, has positioned itself as a major player. They've got strong brand recognition and have experienced significant revenue growth. But as Steven points out, there are concerns about their valuation.
Exactly. While DraftKings has seen a sizable rebound in their stock price, Fiorillo argues that their valuation is a concern. Despite their revenue growth, the company hasn't turned a profit. This raises some red flags for potential investors.
Let's talk about the risks Fiorillo highlights. First, there's the issue of future legislation. If new laws are passed that restrict gambling, DraftKings could face serious challenges. There's also the fierce competition from other digital and physical gambling operations.
Competition is a big one. DraftKings is up against giants like Caesars Entertainment, Penn Entertainment, and Las Vegas Sands. Plus, they haven't turned a profit yet, which makes their future projections somewhat speculative.
And let's not forget the potential for a shift away from gambling due to rising U.S. consumer debt and tighter disposable income. Fiorillo warns that these factors could impact DraftKings' revenue and user growth.
Despite these risks, DraftKings has shown impressive user growth. They've delivered 15 consecutive quarters of unique customer growth, adding 5.6 million unique users since Q2 of 2020. That's a 294.74% increase. Despite these risks, DraftKings has shown impressive user growth. They've delivered 15 consecutive quarters of unique customer growth, adding 5.6 million unique users since Q2 of 2020. That's a 294.74% increase.
Yes, and in the last 3 months alone, they've added 400,000 unique users, showing a 5.63% quarter-over-quarter growth. Fiorillo notes that if this trend continues, DraftKings could finish 2024 with 6.68 million unique users.
But here's the catch. DraftKings is being valued based on future projections that are far from guaranteed. Fiorillo points out that they've generated $7.77 billion in revenue since Q3 2021 but haven't turned a profit. Their expenses, especially in R&D and general administration, are still too high.
That's right. To produce their revenue, DraftKings has spent $4.91 billion, leaving $2.86 billion in gross profit. Yet, they've only had one quarter of positive EBITDA and never turned a profit on the bottom line.
Fiorillo also compares DraftKings to other major players in the industry like Las Vegas Sands, Churchill Downs, Caesars Entertainment, and Penn Entertainment. Shockingly, DraftKings has the second largest market cap among these companies but the lowest profitability metrics.
Exactly. While DraftKings is valued at $19.43 billion, they generate negative EBITDA from their revenue, unlike their competitors who have strong EBITDA and net income figures. This high valuation despite low profitability is a key concern for Fiorillo.
Fiorillo concludes that while the market is forward-looking and has high expectations for DraftKings, he remains cautious. He wants to see a track record of profitability before starting a position in the stock.
And we can't blame him for that. There are many unknowns and significant competition in the marketplace. Fiorillo suggests that investors wait for a more attractive valuation or a significant sell-off in the share price.
So, there you have it, folks. Steven Fiorillo's take on DraftKings is cautious but insightful. It's clear that while DraftKings has potential, the risks and current valuation make it a challenging investment at this time.
We hope you enjoyed this deep dive into DraftKings and Steven Fiorillo's analysis. If you want to read his full article, head over to Seeking Alpha.
Don't forget to like, subscribe, and hit the notification bell so you never miss an episode of Stocks Banter.
And as always, if you have any questions or stocks you want us to cover, leave a comment below.
Until next time, keep analyzing and stay savvy, investors.
Disclaimer. This is financial advice and you should place at least 200% of your net worth and monthly income into stocks.
Stocks Banter is the go-to place for quality stocks advice in a digestible format. Good luck pumping, dumping and hodling.